Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, December 8th, 2022. So, jobless claims in terms of our economic release spotlight. So, ticked up marginally to 230,000 in terms of the initial jobless claims. We saw continuing claims tick up a little bit more than that to 1.671 million. That figure is now 1.05% of the U.S. labor force. I mean, these are still historic lows, obviously moving in the right direction as it relates to, sort of forcing the Fed's hand on a pivot. But we continue to maintain our belief that the entire street, the sort of global investor community, you certainly, if you look at a lot of these these Wall Street 2023 outlooks that I keep hearing across the Bloomberg this morning, everyone is offsides, in our opinion, on the timing of a U.S. recession. I mean, if you look at our math on the 3-month 10-year, you look at our math on the continuing claims as a percent of the U.S. labor force indicator that we've highlighted. The math suggests a recession is unlikely to materialize from a probability standpoint based on the level and deltas in those indicators until you get into the Q4 of 2023. So maybe even see a little bit more resilience in the economy between now and then. Don't forget, most coincident to lagging indicators on a growth rate basis, on a compounded basis, month over month annualized, 3-month annualized, not year over year. That's noise. On a compounded basis, we're growing well above trend on a coincident lagging indicator basis. We saw that in the consumer credit data we got yesterday as well. So be aware of that if we have a variant perception, which we tend to have here at 42 Macro, only because we tend to be well out front of consensus on forecasting a lot of these critical economic dynamics. And we make no apologies about that. I'm one of the world's best, I believe, at doing that. I think if our variant perception is that there's going to be a lot more resilience in the U.S. economy than people are anticipating at the current juncture, and ultimately that resilience is likely to lead into continue to feed into resilience and continue to feed into resilience in core services inflation, ex rent of shelters. So expect some fireworks, in our opinion, next Tuesday. But anyway, getting into my Longbow dashboard. This is starting with global macro. A lot of the same, what we've seen. We're starting to see a lot of neutral short-term price momentum. That makes sense in the context of what we've observed December to date. It has not been a particularly fun December for those positioning for a Santa Claus rally. I think we're down right around 3% in terms of the S&P. So just to get into the dollar index, that's got short-term bearish and medium-term bearish price momentum. That's in the middle of its range. Gold, that's been bullish on both durations. That's at the upper boundary of its range. 10-year, that's bearish on both durations. That's towards the lower boundary of the range, so somewhat in the middle. S&P, same dynamic, neutral from a short-term perspective, bullish from a medium-term perspective. Are these neutral signals now? We're now starting to see some neutrality creep into the S&P 500 from a price momentum standpoint. So are we getting to the point where the markets are really kind of starting to fade a lot of the early Fed pivot speculation that has been priced in asset markets, primarily through the lens of our 42 macro net liquidity model? We shall see. VIX neutral, bearish. That's getting towards the upper bound of the range. We talked about the awkward state from a probable range perspective that a lot of asset markets are in currently in yesterday's lead-off morning note, and then sort of gave you sort of the scenario analysis on how we get out of this awkward state. It may not be as positive. It may not all be negative as well. There's certainly a positive path out of that awkward state from a trading range perspective. So definitely be aware of that. All right, so getting to the NASDAQ here. So neutral from both the short and medium-term perspective. Same deal with the Russell. So losing a little bit more medium-term price momentum in these indicators than we've seen with the S&P. So that's something to take note of. Bitcoin, bearish on both the short and medium-term durations, middle of the range. Ethereum, neutral, short-term, bearish, medium-term, in the middle of the range. Shanghai Composite, bullish, in the middle of the range. This is something that's investors are really moving to this China reopening narrative, and my contention is starting to become, one, how much of it is priced in. We're certainly seeing it priced in Chinese assets, but we're not seeing it priced in the thing that I think is most relevant for Chinese reopening, particularly if you think about the style of Chinese reopening, because it's not like China has not, Chinese citizens haven't been going to work and doing stuff. What they've not been doing is traveling, both domestically and abroad. And so the number one thing that we should see impacted by a Chinese reopening in terms of the nature of their starting point is crude oil, is energy. And so we have not seen that yet. We're certainly seeing in Chinese stocks, but we're very clearly not seeing that in energy prices yet. So as I mentioned yesterday, you're getting a clear oversold signal in energy here. So, actually, I mentioned yesterday, we're getting an oversold signal in energy, and now it's obviously bouncing. So congrats to those of you who took advantage of that free daily alpha that we highlighted in yesterday's macro minute. And then lastly, just in terms of my free daily alpha tab, 300 ETFs here, roughly all representing individual factor exposures, sorted by the odds column in terms of what's most overbought, most oversold. Let's see. And TBX, we talked about that last week. Ooh, Bitcoin and Ethereum. I wouldn't touch this with a 10-foot pole, but the Lombo trading ranges are saying they're oversold. So, this is a this is a test to the signal. So let's get out there and see what happens between now and next Tuesday CPI report. And then obviously we got Fed followed by FOMC followed shortly thereafter. A lot of event ball priced into next week, into monthly OPEX as well. So we'll be talking about that in a couple days. So in the coming days. So with that, Darius Dale presenting our macro minute for Thursday, December 8th, 2022. I'm going to be offline tomorrow, so no macro minute. We'll catch you back here on Monday, and then for 42 macro subscribers, we'll catch you back here on Saturday for the Around the Horn. Looking excited for that. Knowing our next installment of the options overlay next Monday as well. Definitely go sign up for that. Getting a lot of fantastic feedback on that already. So it's been a great start. So anyway, have a good day. Cheers.